Hello traders, you're welcome back to the Forex Geek channel. All right, in this video, we are going to be diving into a powerful crypto swing trading strategy, and it is designed to catch the mid-term moves in the market with structure and clarity. Okay, so without further ado, let us get straight into it. This swing strategy is all about identifying clear market direction and waiting for the market to come to you. All right, we are working mostly on the 4 hours time frame and the daily time frame. Okay, these time frames help to reduce noise and helps you make calmer, more strategic decisions. All right, so now the first step when using the strategy is to identify the trend. Okay, you have to start by analyzing market structure. Okay, you can use the daily chart to identify whether the market is forming higher highs and higher lows, which is going to be an uptrend, right? Or if it is forming lower highs and lower lows, which is what we have right now, a downtrend. All right, we have right now it's a downtrend. Okay, so now you can also add the 50 and 200 EMAs. Okay, we're going to be adding the 50 and 200 EMAs to the chart. All right, I'm just going to use the ribbon, change this to EMA, change this to EMA. Yes, I'm just going to make this color this and make this green. All right, I go to the style, just increase the thickness, and we're good to go. Okay, so we have the 50 EMA and the 200 EMA added to the chart right now. Basically, if the 50 is above the 200, it is bullish. All right, and vice versa for bearish trends. Now, the next thing is to mark key levels. Okay, you plot your support and resistance zones. Look for areas where price has reversed or consolidated multiple times. This is an example, right? It's an example here. Yeah, you can see we actually have another example around here, right? Where price got to this point and got rejected. Price reacted at this zone at least 2 times. Price reacted at this zone again at least 2 times. Make sure that you get a zone that was reacted at least 2 times. Okay, we have another one here. Yeah, price reacted at least 2 times. So you mark your key zones. Yeah, your key reaction zones. Okay, price often swings between these levels, giving you opportunities to enter on pullbacks or breakouts. Now, once you have identified these levels, the next thing is going to be to look for entry confirmation. Now, you drop down to the 4-hour chart. All right, so once price returns to a key level, you look for candlestick confirmation. Now, we're going to use this as a case study. We can say that price got to this key level that we marked out on the daily time frame. And now, can you see this shooting star that we have here? This was a bearish candle confirmation, right? This was a bearish confirmation. You can see this shooting star that appeared around the resistance. So this showed that bearish momentum was setting in, right? So once you get your bearish candlestick confirmation, that is in the bearish trend, right? A bullish candlestick confirmation in a bullish trend. Basically, once you get your candlestick confirmation, be it engulfing candles, pin bars, inside bars, or what have you, you combine this with a trend line break or a retest of a broken structure. All right, combined with a retest of a broken structure or a trend line break, okay, for added confluence. All right, now we can see that at the 4-hour time frame, the 50 EMA was already below the 200 EMA, right? And you can see that around this resistance zone, the 200 EMA was also serving as a dynamic resistance, right? Okay, so I think we have a confluence already. Yeah, I think we have a confluence already. Okay, coupled with the bearish candlestick pattern. Okay, now you can also add the RSI to the chart. All right, The RSI is going to be to spot momentum divergence. Make sure that the RSI is set to 14. All right, it's to spot momentum divergence or overbought and oversold conditions at your entry zone. So if you are in an uptrend and the RSI is bouncing off 40 to 50, if you are in an uptrend, okay, let's just quickly look for an uptrend. Okay, now if you're in an uptrend and you have the RSI bouncing off, let's say between 40 to 50, that's a solid bullish signal. In a downtrend, you look for price, while price is trending downwards, you look for a rejection between 50 to 60. The RSI should get rejected around the 50 to 60 zone. So that's going to be your RSI confirmation for a sell trade. Now, the next thing is to set your risk and your target. Okay, you have to set your stop loss just beyond the structure. So now we are currently in a bearish trend, right? Okay, so that means if you are setting a stop loss after you enter a sell trade, the stop loss is going to be above the recent swing high if it is a sell setup. Okay, if it's a sell setup, it's going to be above the recent swing high, all right? But if it's a buy setup, it's going to be below the recent swing low. And then you can use a fixed 1:2 or 1:3 risk to reward ratio. Or you can just aim for the next major support for a sell trade or the next major resistance for a buy trade. All right? Now, swing trading is all about patience. Remember that this is a swing trading strategy. It's all about patience. Once you are in, let the trade breathe. All right? Do not micromanage. Don't micromanage, okay? You are not scalping here. All right? If you are a scalper, you can check out the video we discussed about scalping. But if you are a swing trader, then you do trading with swing trader mindset. All right? So this crypto swing trading strategy works best when you are not chasing trades, but letting the market come to you. It's about waiting for your conditions to align, market structure, key levels, confirmation, and momentum. These are factors that you should ensure have aligned before you execute your trade. Okay, so stick to your rules, let the setup form. The market will reward discipline more than anything else. If you found value in this strategy breakdown, smash that like button and subscribe to the channel if you're serious about sharpening your edge in the crypto markets. And as always, turn on that bell so you never miss real strategy content like this. Drop your thoughts in the comments and let me know what strategies you'd like to see next. Until next time, stay sharp and trade smart.